Good afternoon.
Good afternoon, sir.
How
Good
are
day.
you?
I'm okay.
Good. We're gonna get started. Okay. So tonight, this is what we're gonna do tonight. We're gonna but actually Thursday's class. We're gonna say what's gonna happen on Thursday's class first before we start tonight's class. On Thursday's class, we will review chapters 1 to 9, 11, and 18. We'll also review some typical exam case study questions. That's like the Martin and Sherry rule. And then I will also give some exam taking tips for this particular exam. Okay, so tonight we're going to be looking at mechanism used in international trade. So that starts on page 97 and ends on page 100. So the first thing we're gonna look at is the letter of credit, which we looked at in one of our earlier chapters when we were looking at some of the different products, business products. We were looking at customs bond and some of those other business products that are used, the check writing facilities, customs check writing facilities, etc. So the first one is the letter of credit, and if we go to the top of page 97, what is a letter of credit? A letter of credit, or LC, or sometimes it's called a documentary credit, a DC, is a document from a bank guaranteeing that a seller will receive payment in full as long as certain delivery conditions have been met. In the event that the buyer is unable to make payment on the purchase, the bank will cover the outstanding amount. Letters of credit are often used in international transactions to ensure that payment will be received where the buyer and the seller may not know each other and are operating in different countries. In this case, the seller is exposed to a number of risks, such as credit risk and legal risk caused by the distance, differing laws, and difficulty in knowing each party personally. A letter of credit provides the seller with a guarantee that they will get paid as long as certain delivery conditions have been met. For this reason, the use of letters of credit have become a very important aspect of international trade. The bank that writes the letter of credit will act on behalf of the buyer and make sure that all credit conditions have been met before making the payment to the seller. Most letters of credit are governed by rules, governed or promulgated by the International Chamber of Commerce, ICC, known as Uniform Customs and Practice for Documentary Credits. Letters of credit are typically used by importing and exporting companies, particularly for large purchases, and will often negate the need by the buyer to pay a deposit before delivery is made. So, so the first bullet point there kind of summarizes that a letter of credit, also known as a documentary credit, is a lending facility issued by the paying bank on behalf of its customer and guarantees payment to a third party, duly communicated through the third party's own bank or a correspondent bank. This agreement is irrevocable. So that means that the person who's purchasing just can't simply end it just by saying, I don't want to have it anymore. It'll be the responsibility of the bank who has issued the letter of credit, this guarantee, to the seller, to confirm that the seller does not have any orders that they have shipped to the buyer outstanding. Okay, so it has to go through a process before the bank would cancel the letter of credit or the documentary credit. Okay, so it's not simply just on the word of the person, the buyer who initiated it. Okay, and again, it says here it guarantees payment to the supplier. The bank is obligated to pay only if all the terms and conditions are fully met. Okay, so continuing with aspects of the documentary credit, we already said that it's governed by rules of the International Chamber of Commerce, the ICC rules, which are known as Uniform Customs and Practices for Documentary Credits. Now, with documentary credits, they are like a standardized form internationally, very much like your wire transfer form. So no matter what language they're in, a lot of the information, even if you can't translate it word for word, you would be able to know who the sender is, or who the purchaser is, who the supplier is, the amount, the bank, the different codes that are required, the sort code and the wire transfer code, the bank account numbers, whatever, because they'll basically all be in the same position, regardless of the language. And so that is one of the reasons for uniform customs and practices for a lot of these bank forms. So like I said, it's not just letters of credit, but wire transfers and a number of other standardized forms that are used internationally. So just the letter of credit happens to be one of those where there are some standardized, where the different locations are standardized in the form, so you know who is going to or not. Okay. It says again, reiterating what we read on page 97. Letters of credit are typically used for importing and exporting companies, particularly for large purchases, and will often negate the need by the buyer to pay a deposit before delivery is made. And of course, we look at the diagram that we may be familiar with. Remember, we started out, we said it was the exporter, the person who's selling the goods, and then you had the importer, or the buyer who wants to buy the goods from the exporter or the seller, and there's trade going between the two. So that's why the two-way arrow. One has the goods, one has the money, and so they're trading goods for money. But oftentimes, because the exporter is either let's say in America, one might be on the East Coast, one might be on the West Coast. In the case of the Bahamas, we may be ordering goods, say, from China, or even the US. We are separated by sea. So there has to be some sort of mechanism that would facilitate the payment. It isn't like, okay, well, I owe lickety split, $200 for supplying me with ice cream. I just send someone down there with the money or the check or whatever it is. This is overseas or very long distances, and so it requires different types of payment. And in this instance, for trade, we're using the letter of credit. So the importer would go into his or her bank first of all, and they would initiate the process of setting up the letter of credit. Okay, and the importer bank would liaise with the exporter's bank, and that is where the letter of credit would be between those two parties, be established between those two parties. So the importer's bank sets up the letter of credit. They get whatever collateral security they need. Usually it's cash secured. And so then they set up a letter of credit to the exporter's bank. As a result, the importer is able to effect payment to the exporter's bank. The exporter's bank will confirm that they have the necessary funds to the exporter, and so the exporter will release the goods. Okay, and that is a very simplistic way of looking at it. Okay, on the top of page 98, it's a little bit more complex. Okay, so you'll see it says importer, buyer, applicant. There's at the very top, that little opal looking thing they're saying contract with a number 1 arrow. Okay, the importer or the buyer or the applicant. Number 2, they applied for letter of credit to their bank, the importer's bank, which is the issuing bank. The issuing bank sets up, number 3, sets up the letter of credit with the exporter or seller's bank, or an intermediary, a correspondent bank. Okay, they advise, point 4, they advise the exporter that a letter of credit has been, oh, sorry. Okay. Okay, everyone is there? Still there?
Yes, sir. Yes,
Okay.
sir.
Yes, sir.
Sorry about that.
Yes, sir.
I just clicked something there and caused it to advance to the end. Okay, so again, we going back. So the exporter's bank, point number 4, advises the exporter that the letter of credit is in place. Okay, so then 6, the documents are prepared. So they go to the advising bank. Okay, and then we move on from there to the from the advising bank or the exporter's bank. They send the documents to the importer's bank. Payment is made again to the exporter's bank from the importer. Okay, and then the documents are released against the cash or the transfer, right? So either it is paid in cash, liquidated, the letter of credit is liquidated in cash, or a wire transfer is sent. In this case, because it's international, the funds are made by transfer. Okay, and once the importer gets those documents, they can go to customs, whatever, and take delivery of their goods. So it's a little bit more complex than the one on the bottom of page 97. Okay, but the one on page 97, simplifies it for us. Okay. Any questions on that?
Good, sir.
No, sir.
Okay. So let's move to other mechanisms, other payment mechanisms. And we're going to be looking at SWIFT, CHIPS, CHAPS, Fedwire, drafts in this segment. Okay. I've just changed it a bit about, I changed it up a bit where I have Fedwire. Instead of coming after CHAPS, I have the Fedwire coming after SWIFT because I think it will flow a little bit better. Okay, so SWIFT, if you want to know what SWIFT means, SWIFT is a society for, what's going on here? Okay, sorry about that, folks. SWIFT is a society for worldwide international financial telecommunications. So that's what SWIFT means. Fedwire is a communication network of the Federal Reserve Bank system of the United States of America, and there are 12 federal banks in the Federal Reserve bank system in America. There are 12, located in 12 different states. CHIPS, if you want to know what that means, is the Clearinghouse Interbank Payment System. CHAPS is the Clearinghouse Automated Payment System. And then drafts, just a brief overview of the definition, is a payment instrument that carries a guarantee of funds from your financial institution. Okay, so let's look at SWIFT first. Okay, so SWIFT is a system that banks use to securely send messages to each other. It is one of the key pillars of the financial world, connecting more than 11,000 member banks in some 200 countries and territories globally. To make a SWIFT transfer overseas, you need to enter your recipient's information, that is their name, address, their bank's name, address, the recipient's bank's account number, and their SWIFT or BIC code. Okay, that's a bank identification code. The amount you want to send and confirm your payment. A SWIFT transaction is initiated by the sender. You will have to provide your sender with details, including your name, your account number, your address, your bank name, and the SWIFT or BIC code of your bank. If you don't know your bank's SWIFT or BIC code, you can obtain this information from your bank or on their website. SWIFT payments generally takes anywhere from 1 to 4 working days. The transfers aren't instant. Before your funds are credited to the recipient, they will undergo anti-fraud and anti-money laundering checks, and these take time. Now, what is the volume business transacted via SWIFT on a daily basis? Well, you see there's SWIFT messages that direct the transfer of nearly $5 trillion worldwide each day. Okay, so via SWIFT of nearly $5 trillion worth of business every day. And you'll see the source of information there is fincen.gov. You could visit that site if you're interested. So that's SWIFT. These definitions that I'm going through on the PowerPoint presentation, you're not required to know these for or be conversant with these for the exam. Only what's in your text. I'm using these to just explain them a little bit more. Okay. So Fedwire is the next one we want to look at. So Fedwire is real-time gross settlement funds transfer system operated by the United States Federal Reserve banks, which allows financial institutions to electronically transfer funds between its more than 9,000 odd participants. Whereas as we saw with SWIFT, Swift takes 1 to 4 days, so it's a slower process. It's not real time. Okay, Fedwire on the other hand is real time, and actually Fedwire is a bit more expensive in any event than Swift. The Fedwire fund service is a credit transfer service. Participants originate funds transfers by instructing a Federal Reserve Bank to debit funds from its own account and credit funds to the account of another participant. Now, these are normally most of your very large, high volume transfers. Okay, the Fedwire fund service is a real-time gross settlement system. Each transaction is processed individually and settled upon receipt by a highly secure electronic network. In 1915, the 12 Federal Reserve banks began to transfer funds between parties in their respective regional districts. In 1918, a proprietary system for processing the transfers was developed, which would form the basic structure for the modern Fedwire system. In 2021, the number of daily transfers averaged over 811 million transfers. Those are transfers, that's transfer volume, 811 million transfers with an average dollar value of $3.936 trillion on a daily basis. So that's a whole lot of money being transferred. So that's Fedwire. Let's move on to CHIPS. CHIPS was organized in 1970 by the New York Clearinghouse Association, which is a group of the largest commercial banks in New York City. It is the largest private sector US dollar clearing system in the world. CHIPS is already operated by the Clearinghouse, this is the US Clearinghouse, and owned by approximately 59 financial institutions that participate in its system. Along with its public sector counterpart, Fedwire, CHIPS forms the primary network for transferring and settling payments in US dollars. According to the Clearinghouse, CHIPS settles around $1.8 trillion daily in domestic and international payments. So they too are very high dollar volume. CHIPS and Fedwire involve both transmission of instruction messages and the settlement between institutions, that is money. SWIFT, on the other hand, does not affect the actual movement of any funds, but consists entirely of instructions for transfers that institutions must complete by other means. And normally they'll be through correspondent bank settlements. Okay, and so that is why the SWIFT codes are necessary and the BIC codes are necessary for CHIPS. Okay, why do banks use CHIPS? CHIPS is slower but less expensive than the other major interbank clearinghouse known as Fedwire, making it more amenable to larger transactions that can take longer to clear. CHIPS works by netting debits and credits across transactions, providing both clearing and settlement services to its customers' banks. So CHIPS nets out transfers. Fedwire is a gross clearinghouse. So the amount that they send, they settle them individually, as we said previously with regard to Fedwire. Okay, whereas CHIPS, they net out their total debits and their total credits at the end of each day. So CHAPS, what is CHAPS? Well, CHAPS is the basically the British counterpart to CHIPS. It is a bank-to-bank transfer system that runs through the SWIFT network. It is typically reserved for once-off high-value payments that need to be sent and received on the same day. CHAPS is a UK-based system that facilitates large British pound denominated money transfers. It was established in 1984 by the Bankers Clearinghouse, that is the UK, in London. Okay, so that's the clearinghouse. The Bankers Clearinghouse is the one in the UK. What are CHAPS payments used for? Well, businesses may use CHAPS to pay their suppliers or to pay taxes. And individuals may use CHAPS when paying a house deposit or when moving their savings from one account to another. CHAPS allows funds to be transferred almost instantaneously, minimizing the risk of loss or theft. For most everyday transactions, CHAPS is unlikely to be economically viable because the associated costs are relatively expensive compared to alternative mechanisms, such as wire transfers or electronic funds transfers, EFTs, such as SWIFT. Because it is used by some of the world's largest financial institutions, CHAPS roughly facilitates $400 billion in currency transfers, $400 billion in currency transfers every business day. So you can see that in all of these SWIFT, Fed, wire, CHIPS, CHAPS, the dollar values are very high on a daily basis. Okay, and then the final one that we're going to look at is the bank draft. So what is a bank draft? It is a negotiable instrument where payment is guaranteed by the issuing bank. It is a type of bill of exchange, analogous to a foreign buyer's check. Well, I put the two spellings of check there, right? So the British spelling and the American spelling. Okay, so just like we will write, we have Bahamian dollar checking accounts, and we will write a check with their U.S. accounts, and so the bank draft is similar to the checks that we write, more particularly a manager's check, something that we call a manager's check. So, for example, if you were buying a car, the car dealer would say, bring me a manager's check. Okay, so the manager's check is in local dollars, B dollars. That is also a draft, but we call it manager's check because it's local. We refer to them as drafts when they are issued in foreign currencies, whether that is US dollars, British sterling pounds, Canadian dollars, or whatever the currency may be, euro, or whatever. Okay. So, and it's the foreign draft is set up very much the same way as the manager's check. Okay. So banks will verify and withdraw funds from the requester's account and deposit them into an internal account to cover the amount of the draft. Okay. And normally with foreign currency drafts, the issuing bank will have an account with a foreign bank that deals with the particular currency. So, for example, let's say Scotiabank may have an account with Bank of America in the States, whether that's Florida or New York or California, wherever the case may be. So, so they would then as an internal entry, they would credit the funds to the account in with Bank of America. And when the draft is settled, whatever bank that goes to, when they settle that settles with Bank of America. And Bank of America will debit the Bahamian bank account in their books. And that's what they call correspondent accounts. Okay. So banks here in the Bahamas will have accounts with foreign banks in America, Canada, wherever it is around the world. A seller may require a bank draft when they have no relationship with the buyer, and also as a security measure, because you don't want to be handling large sums of cash. Okay, and also for AML purposes. So so normally, like if you're buying a car, the amount of funds that need to be exchanged to purchase the vehicle from a car dealership exceeds the minimum amount of cash that can be deposited into the dealer's account. So for AML purposes, they will need the bank draft. So the bank draft will take the place of having to do a declaration of source of funds. Okay. Are there any questions?
Good,
No,
sir.
sir.
Okay. Okay, so let's move on to look at facilitators of international trade. And so we're looking at export-import banks, which are called EXIM banks for short, EX from export, and IM from the import, so EXIM banks. So an EXIM bank is a government or
Excuse me, Lord, is that a different chapter, sir?
This is page 99. Page 99 of chapter 18.
Thank you, sir. I just lost my way.
Okay, no problem. Okay. So an Exim Bank is a government or semi-government agency which provides insurance cover to importers against losses from non-payment by the importers as a means to promote the country's foreign trade. That is the primary purpose of the Exim Bank. But there are some other attributes of the various Exim banks. And as we go through some of these examples, you will see some of those similarities and some of the differences. So the ones that we'll be looking at, the examples we're going to be looking at is the United States, China, India, Malaysia, and Jamaica. And this gives us a variety of Exim banks globally. It gives us large countries as well as small countries, developed countries as well as developing countries. And also in terms of the political and economic setup of these countries, they diversify slightly. Okay, so in the United States, we're looking at a republic, which is based on a democratic type of government, and that's in the Western hemisphere of the world. We have China, which is communistic, and that's an East Asian part of the world. We have India, which is a British Commonwealth country, has a democratic type of government, and that's South Asian country. Then we have Malaysia, which is Islamic in its religion, and that overshadows how that country is ruled. And it's interesting that this is the only one in which the actual religion is, or the predominant religion is mentioned. And as I said before, that is because it dominates how things are done. It is a representative democracy, although they have a constitutional monarchy. So it's quite an interesting, Malaysia is quite an interesting study in and of itself, if you want to study that as a country. And this is a Southeast Asian country. Then, of course, we move closer to ourselves. We have the Exim Bank of Jamaica, which again is another Commonwealth country, British Commonwealth country. It is democratic in its type of government, and it's located in the Caribbean, again, closer to us. So those are the five that we're going to be looking at. Okay. So the first one is the Export-Import Bank of the United States of America. The Exim Bank of the USA was created in 1934 and is headquartered in Washington, D.C. It operates under a charter that was periodically reviewed by Congress, and with its charter made permanent by the Export-Import Bank Act of 1945. It is a federal agency that supports US jobs by facilitating exports of goods and services. The bank generates revenues from interest and fees. It has contributed $9.5 billion to government coffers since 1992. Risk management is prudent, with a reported default rate of 1.555% as of June the 30th, 2021. So the default rate is extremely low. Rather than competing with private sector lending, the agency looks to accept the type of country risk, political or commercial, that private businesses are unable or unwilling to take on. Okay. Now, while the Bahamas, for example, does not have an export-import bank, an EXIM bank, we have a development bank. Jamaica also has a development bank. Okay, so to some extent, you might want to say that we have kind of like a baby import-export bank, although not in the true sense of the word EXIM bank. But like the export-import banks globally, the Bahamas Development Bank looks to accept the type of risk that private banks or financial institutions are not willing to take on. Okay, and of course, the Bahamas Development Bank is quasi-government, so it has the support and backing of the Bahamas government. The EXIM Bank of the United States of America offers trade finance solutions such as insurance against foreign default, working capital guarantees on letters of credit extended by foreign banks, and loans provided to potential export purchasers. It also allows domestic businesses to take out loans backed by foreign receivables or foreign assets. So in this last paragraph, we see an expansion of the services to other than just offering insurance against default. Okay, so the USA EXIM Bank offers working capital guarantees on letters of credit, and loans provided to potential export purchasers. We move to the EXIM Bank of China. This was founded in 1994, and you see that with all of these actually, they're fairly recent. These are fairly recent entities, recently formed entities. These don't go way back, with the possible exception none of these go way back. They're founded in the 1900s, late 1900s. So the Import-Export Bank of China was founded in 1994. Its headquarters is in Beijing, China. It is a state-funded and state-owned policy bank, and of course that is to be expected because China is communist, with the status of an independent legal entity. So although they're communist, they say it has an independent status, but it's an independent legal entity. But we know it's still controlled by the Chinese government. It is a bank directly under the leadership of the State Council. There you have it. Okay, so directly under the leadership of the State Council, and dedicated to supporting China's foreign trade, investment, and international economic cooperation. With the Chinese government's credit support, the bank plays a crucial role in promoting steady economic growth and structural adjustment, supporting foreign trade, and implementing the Going Global strategy. It is committed to reinforcing financial support to key sectors and weak links in the Chinese economy to ensure sustainable and healthy economic and social development. And then finally, in China, the bank has 32 branches on the mainland and 1 representative office in Hong Kong. Overseas, it has a branch in Paris, a representative office for Southern and Eastern Africa. In St. Petersburg, they have a representative office, and they have a representative office for Northern and Western Africa. Okay. So that is the US, China. We're looking at India. The EXIM Bank of India was established by the government of India under Export-Import Bank of India Act 1981 as a purveyor of export credit, mirroring global export credit agencies. The EXIM Bank serves as a growth engine for industries and small and medium enterprises through a wide range of products and services. The Indian EXIM Bank is India's leading export financing institute that engages in integrating foreign trade and investment with the country's economic growth. And so you see that thread of foreign trade and the country's economic growth tying in. And so that is the main thrust of these EXIM banks, okay? It is a wholly owned subsidiary of the Indian government, and its headquarters is in Mumbai, which was formerly known as Bombay, India. Okay, so it's in Mumbai, India. Next, we'll move on to the Import-Import Bank of Malaysia. Okay, so this EXIM Bank was incorporated on the 29th of August, 1995, as a government-owned development financial institution, tasked with delivering effective financing and takaful solutions for cross-border ventures. It's headquartered in Kuala Lumpur, Malaysia. So most of these will be, you'll find that they'll have their EXIM banks in their capitals for most of these countries. Okay, so let's look at what that word takaful solutions. What is takaful? Okay, well, here's what takaful is. Takaful, which is often referred to as Islamic insurance, is a way for businesses to mitigate the financial risk of unforeseen events. And of course, we know that EXIM banks, one of the main purposes for them to exist is to provide insurance against to foreign exporters to guarantee as a way of guaranteeing payment, right? So takaful is Islamic insurance, and is a way for businesses to mitigate the financial risk of unseen events. Takaful or Islamic insurance is based on social solidarity and cooperation. It is a pact among a group of people who agree to jointly indemnify loss or damage from a fund they donate to collectively. Okay, so this takaful insurance, you see, this is not like a typical insurance company that has an underwriter located somewhere else around the world that funds it. This is almost something like a cooperative where a group of people come together and they fund this takaful or Islamic insurance. Okay. Wholly owned subsidiary of the Minister of Finance, Inc., the bank was established to promote reverse investment and export of strategic sectors such as capital goods, infrastructure projects, shipping, value-added manufactured products, and to facilitate the entry of Malaysian companies to new markets, particularly to the non-traditional markets. EXIM Bank's mandated role, as specified by the government, is to provide credit financing, export credit takaful, and guarantee services and facilities to finance and support exports and imports of goods, services, and overseas projects and investments with emphasis on non-traditional markets. The bank's clientele consists of large corporations, small and medium enterprises, foreign governments and foreign companies, and covers all sectors ranging from trading, manufacturing, infrastructure, right down to agro-based businesses. Okay, so that's EXIM Bank of Malaysia. Next, we move on to the EXIM Bank of Jamaica. Okay, the National Export-Import Bank of Jamaica is Jamaica's premier trade financing institution and the Caribbean's first export-import bank. It plays a fundamental role in national development by providing a wide range of financing instruments at competitive interest rates for the country's productive sector. It aims to assist in the growth of this sector and to contribute to the development of the wider national economy. The Exim Bank of Jamaica was established in 1986 and has over the years made sure to honor its mandate of helping business ventures become viable and competitive in international markets. Again, like most of the other Exim banks in their countries, the headquarters is in its capital of Kingston. Specific focus is placed on small and medium enterprise entities involved in non-traditional exports, such as tourism, manufacturing, agro-processing, mining, the service industry, information communication, and technology, and the creative industries. The Exim Bank of Jamaica offers an impressive suite of financing products to these entities. This particular Exim Bank is particularly known for its trade financing facilities and specifically its international lines of credit, which enable Jamaican companies to do business with any country in the world. Its products and services aim to fulfill both the short and medium-term needs of its customers, and the facilities are available in both Jamaican and US dollar denominated currencies. And like most of the others, I have the source of that information there. Okay. Are there any questions before I move on?
Good, sir.
Okay. So we've, excuse me. So far we've looked at the mechanism used to facilitate international trade. We've looked at the letter of credit or documentary credit. We've looked at other payment mechanisms such as SWIFT, CHIPS, CHAPS, Fedwire, and draft. And we've looked at some facilitators of international trade, in particular Exim banks, and precisely the Exim Bank of the United States of America, the Exim Bank of China, of India, Malaysia, and Jamaica. And so that brings us to the end of chapter 18, folks. So any questions on chapter 18 before I move on?
No, sir.
Okay. So what I want to do is class will end early tonight, and there's a reason for that, as you will soon find out. But let me just, I know that Thursday we're going to be going through, do a review for the final exam, but let me just prep you and so you can begin getting your minds wrapped around the exam format. Again, true, false, multiple choice, fill in the blank, and a case study type question. The exam is 2.5 hours long. Most people finish it in less than that time. But if you do need additional few minutes, the Institute will give you a few minutes. But I suspect that all of you, based on what I've seen happening with your class interaction and your homework assignments and participation in class, you shouldn't have any difficulty finishing within the 2.5 hours. True and false, there are about 40 questions plus or minus. I should have been, instead of an equal sign, I should have been a plus sign. My apologies. So 40 or so questions, roughly about 40 questions for true and false, another about 40 questions for multiple choice, 18 to 20 or so questions for fill in the blank. And then you have a case study type question similar to Martin and Sherry rule. And that the amount of points that goes to that is between 25 to 30 points. So you end up with roughly about on average about 100 points, anywhere from 90 to 100 points in total in the exam. Okay. Any question on the exam format?
No, sir.
No,
Just
sir.
a little concerned with filling the blanks though.
Like I said,
Likewise.
sorry, go ahead. I don't think you should have any major problems with fill in the blanks. Like I said, based on what I've seen thus far. Okay, so there are only a few questions where there may be like a phrase to put in, but for the most part, they're just one word or two words or hyphenated word or whatever it is. Okay, so but again, we'll talk a little bit about that when I talk about the exam tips. Okay, because what you find, well, let me just say one thing here. What you'll find is an exam like this, true, false, multiple choice, fill in the blank, is that, and particularly when you're looking at between sections 1, 2, and 3, that's 40. That's 100 questions right there, right? So 40 true and false, 40 multiple choice, 20 fill in the blank. That's 100 questions. How many questions can you form out of the text? Okay, key questions. Oftentimes you'll find that some of the questions are repeated in one or more of the other sections, but stated in a different way. So it may be a true or false question, but then it may be a fill in the blank in another area. So sometimes you will have help by looking through previous questions that are similar, and it'll help you with questions in another section. Okay, so again, I'll go through that a little bit more and give you one or two actual examples. In taking the exam. Okay. Okay. So true, false, multiple choice, fill in the blank, case study type question. And again, you shouldn't have any difficulty. I don't want to say much more without start going into the tips, which I plan to cover on Thursday. Okay, so so the chapters covered chapters 1 through 9, chapter 11, and chapter 18. Okay. Key study resources, as I mentioned in one or two of the earlier classes, first classes. Okay, end of chapter review questions, homework and class assignments, the Martin and Sherry rule, case study, and others. And since we started the classes, I gave you a mock midterm exam, and then what I will be doing is tonight I will be giving you a mock final exam, which I'll send to you after this class, and that's for you to do on your own. We will go through that on Thursday. Okay, on the mock final exam that you'll be getting after I sign off here tonight, you'll be getting the mock exam. You can do it from try to do it from your memory first, and then do it from your book, using your book, and see how you've done. Okay, there won't be a grade taken for this, but you should do it as a prep for the final exam, and also to help you with your study. Okay. Okay, any questions on that?
I'm good, sir.
Okay, so so again, key study resources, end of chapter review questions. Now there are one or two of them that the questions we won't deal with. So for example, I think chapter 8, there was one on I think the last question, number 6, I think it was, or the one on about VAT and the VAT and the sale of real estate. That particular question, you know, that you won't be required to know that because we haven't covered that. Okay. However, I'm still working on trying to get confirmation as to the how VAT affects real estate sales. And if I get that by Thursday, I'll provide it to you Thursday, and that'll be for your common knowledge. There won't be any questions on in the exam, but it'll be good for you to know that, or have that information at hand, for those of you who are involved in lending, or for those of you who are, you know, planning on buying or selling real estate. Okay, so either for your career or for your personal benefit or for both, it'll be good for you to have that information. Okay, and even if it's after Thursday, I'll email it to you guys if I get the confirmation from my legal person. I'll send it the following week because it is good information. Like I said, either for your career and or for your personal benefit. Okay. So are there any questions before we end the class?
No, sir, no questions from me.
Okay.
None for me, sir.
No, sir.
So what I will do is I will, within about 10
No,
minutes,
sir.
okay. So within about 10 or 15 minutes of ending this class, you'll receive the email with the mock final exam. Okay, like I said, I'm not taking a grade for it, but we will go through the questions on Thursday, along with a few other exam type questions, and to just do a general review. If there are any particular areas that you're concerned with, you can send me an email so that you would want a particular area covered, and I will focus on that as well as part of the class. Okay.
Okay, no problem.
Okay, so you have a good rest of the evening, and I'll see you on Thursday.
Okay, thank you so much. Good night.
Good night, all.
Okay, good night.